Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Infosys. Our analyst has upgraded the recommendation on Infosys to buy rating from reduce with price target of Rs 1690. Infosys remain well placed to win large deals, defend market share given its diversified presence across geographies, well spread revenue streams across verticals, and owing to its sharp focus on strategic clients. Deal momentum continues to stay robust, with Infosys reporting few large mega deals ranging from 1.5 to $2 billion in July to September 23. We expect Infosys to largely benefit from the likely recovery in the highly impacted verticals BFSI, communication, MNC telecom company deal win of $1.6 billion and high tech in the next couple of quarters, aided by deal wins and ramp up of deal pipeline. We expect 8.6% sales and 10.2% PAT CAGR over FY23 to 26 earnings. Despite the uncertain macro environment, the strong competitive strength of the company are expected to provide resilience to revenue growth profile through large mega deals win and robust deal pipeline, while margin expansion is expected to be aided by improvement in operational levers. At the current market price, the stock trades at 21.6 times its FY25 and 19.1 times FY26 estimated EPS. Next on radar is PCBL Ltd. Our analyst maintains positive view on PCBL with an upside potential of 20% from the current market price. Global carbon black cycle indicates pockets of supply imbalance, especially in Europe, which provides opportunity for India players like PCBL to further consolidate its global position in carbon black market. We believe that the company can sustain current strong volume growth momentum and sustain margin improvement over next couple of years, as company plans to add additional capacity of 80,000 to 1 lakh ton each year on an average given imbalance in global carbon black supply demand scenario. PCBL will be ramping up production of its new carbon black greenfield plant in Tamil Nadu, and the same is expected to cater to rising demand, export as well as domestic, and drive double-digit volume CAGR over FY23 to FY25 earnings. Potential increase in the share of high-margin specialty carbon black in volume mix bodes well for margin expansion and expected to improve quality of earnings going forward. We expect PCBL EBITDA to post a 14% and PAT to post a 16% CAGR over FY23 to FY25 earnings. At the current market price, the stock is trading at an attractive valuation of 12 times FY24 estimated EPS and 10 times FY25 estimated EPS. Moreover, a low net debt to equity ratio of 0.1 times and the healthy dividend yield of 3 to 4% provide comfort. For more detailed disclosures and disclaimers, please refer to our research report or contact our nearest branch. Please read the risk disclosure document issued by SEBI and relevant exchanges and terms and conditions on sharekhan.com before investing.
Thank you for watching. To keep up with the latest from Sharekhan, make sure you subscribe to our channel. You can also download the Sharekhan app for all your trading and investing needs. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.